If you're wondering how Australia's housing market is going to keep performing, has it still got legs, considering that we're not going to have further interest rate cuts for a little while and all the negative media, today's episode will give you the clarity you've been waiting for. Because according to the latest My Housing market data from Chief Economist Dr. Andrew Wilson, home prices across Australia's capital cities accelerated again in October. It was actually the strongest monthly growth for nearly 4 years. Now, this kind of broad-based growth may surprise some commentators who've been predicting a slowdown. But as Andrew points out in his latest report, the combination of low interest rates, improved affordability, chronic undersupply, FOMO continue to fuel strong buyer demand. And particularly in markets where stock remains scarce, confidence is fast returning. Hi, I'm Michael Yardney and welcome to the Michael Yardney podcast. Look, after 5 decades in property, I've seen just about every cycle, trend and so-called crisis there is. And I know how confusing it can be with all the mixed messages out there. Everyone's got an opinion and not all of them are worth listening to. And that's why twice each week I cut through the clutter to bring you clear, practical insights about building wealth through property, proven strategies, smart psychology, and lessons from some of Australia's leading experts. In today's show, we're going to unpack what's really driving this renewed momentum, what the data says about where house prices are moving next, what's going to happen with the Reserve Bank and other interest rate cuts still going to be affecting our market, how they're going to support the markets over the next year or so. And we're going to look at what these trends mean for property investors, home buyers, policymakers, trying to tackle the affordability and supply constraints. So whether you're just trying to make sense of the current price surge, wondering where to invest, or just keeping an eye on the cycle, this is going to be a show where you're going to get lots of information as I have a chat with Dr. Andrew Wilson, Chief Economist of My Housing Market. Let's get on with the show. It looks like the spring selling season's really come alive, with the latest My Housing market report showing that home prices accelerated again over October. In fact, it's been the strongest monthly gain in nearly 4 years. Lower interest rates seem to have re-energised buyers, and all our capital cities are now showing price growth. We're in fact seeing some remarkable resilience to all those negative messages in the media in what remains a chronically undersupplied housing market. So welcome to Property Insiders, where Australia's leading housing economist, Dr. Andrew Wilson, and I take you behind the headlines to uncover what's really going on in Australia's property markets. So whether you're an investor, a home buyer, or simply property conscious, this is where you're going to get the real story. And Andrew, your latest My Housing market report showed that national capital city house and apartment prices jumped again.
Yes, Michael, plenty of momentum in the market. We've discussed this over recent months. We felt that this would continue to accelerate. I think we've still got momentum from that previous or the latest interest rate cut, which was, of course, August. I think that's still working its way through the system. I think we're now starting to see not just confidence in the market, but buying decisions being brought forward. Of course, that's called fear of missing out, FOMO.
Yes.
And of course, over October, we had a surge in first home buyers. I don't think the impact of that first home buyer activity, courtesy of the government's first home buyer policy that it announced, I don't think that's into the market yet. And we'll continue to see that in terms of price outcomes over the next few months as the year finishes. But yes, another strong month. And of course, the seasonal effects of the spring selling season, we also indicated that would be a driving force. Of course, it is the focus of housing market activity generally through the year, the spring selling season. We certainly get activated buyers and sellers in the marketplace, and it is traditionally the strongest period of activity throughout the year. So I guess, is it a perfect storm, Michael? Lower interest rates, we have a strong economy still, even though a lot of naysayers were shouting to the rooftops doom and gloom with that higher unemployment rate over September. But nonetheless, still a relatively low unemployment rate, record participation rate. As you mentioned, we're still undersupplied. Some concerning signs that what was a bit of a boost to new dwelling approvals this year is now starting to run out of steam. So no surprise that prices are accelerating. So let's have a look at the data, Mike.
Well, before we get into the data, there are two separate things. We also got the most recent CPI figure, which means that an interest rate cut's going to be off the table for at the November Melbourne Cup meeting. But Andrew, you've for the last month suggested the Reserve Bank maybe started cutting a bit too soon. So I don't think this is going to surprise you, is it?
It's not. I think that we could say that the Reserve Bank was a little ahead of the curve in terms of its interest rate cuts. It had consistently said that its plan was to cut interest rates as the inflation rate that it prefers, and that's the quarterly underlying inflation rate, was consistently, it said that that rate had to be consistently within the midpoint of the target range. The target range is 2 to 3%. So we needed to have a consistent period with the target meeting that sort of 2.5% scenario. It hasn't done that. It's now breaking clear. The latest data showed us that those measures, the quarterly measure, which we won't see from now on, it'll only be the monthly measure, but it's certainly now at the end of the target rate, and some of the measures of inflation are now outside the target range. Obviously, it hasn't met that scenario, and maybe we could just speculate that there was maybe one too many interest rate cuts, but that's okay, Michael. It means we've got an interest rate cut in the bag, and I'm sure homeowners won't be complaining given how housing markets are. But I'm not sure if inflation did continue to become a problem. I'm not sure it can be fixed by higher interest rates, but it would be, if it did occur, it would be just giving back that one interest rate cut that we had that was probably a little bit ahead of the game in terms of the data. But that's all fine. And I think that, we're in for a period of settled interest rate policy. Now there are twin tensions, maybe some easing in the business cycle, and certainly the prospect of higher inflation, because I don't think electricity prices are going to be any lower. In fact, they'll continue to rise. We know that because we don't have the benefit of the subsidy. But, Michael, we might have the government acting again to support
well, they're a little bit red-faced with that, so they may. Now, before I ask you to go through your figures each month, I put a little disclaimer because we have lots of new viewers, lots of new listeners. So when you talk about quarterly median house prices, which the charts are going to show and which you're going to be discussing, we're actually not talking about 3 months growth. We're actually talking about monthly growth of the last 3 months over the previous 3 months. It's a rolling quarterly figure that you report, Andrew.
Yeah, and that gives us the opportunity to take 3 months of data. I think 1 month of data, unless you're manipulating it, tends to be a small amount to get a sustained and a reliable figure because there aren't as many observations. So we take the 3 months where you get certainly more sales being measured, so it's a more reliable and robust measure, but we advance it, as you said, Michael, month by month. So it shows you that underlying trend. So I think it's the best of both worlds. It gives you a higher volume of observations, so you have more certainty in terms of the data, but you're advancing it month by month, so you can see that underlying trend, how it changes from month to month.
Let's start with the houses first, Andrew, and then we can look at how the apartment market performed.
Very strong result for houses, Michael. We had the national weighted average capital city median house price up by 1.6% over the October quarter compared to the previous September quarter. That's the highest growth rate that we've recorded for nearly 4 years, Michael. So we have to go back to November 2021 to see a higher result. And of course, that was the bounce back period following the end of lockdowns from the COVID pandemic periods. There was a reason we had strong growth.
And it's also when interest rates were remarkably low at
right.
wartime levels, really.
That's right. So there was a lot of contingent factors then that added to a very strong prices growth, and it was coming from a period of weakness through the COVID period. Where, of course, lockdowns affected the capacity to purchase properties. So this is a remarkable number, very strong number. As I said, we've got the drive of lower interest rates, still strong economy, momentum, and the spring selling season are all pushing prices up. And even though we're starting to see, as usual, in terms of seasonal impacts, just a little easing in activity, certainly clearance rates in the auction market, which are still strong, but that's what we tend to see as the spring selling season advances towards its conclusion. So I would still expect to see strong results for November, but maybe this will be the peak of growth. But if it is the peak of growth rates, Michael, it's a very strong result nonetheless. And it is the
You're not suggesting that prices aren't going to keep growing. They're not going to keep growing as quickly.
This is a very strong result. Dare I say, in terms of the national data, this is a boom time result, Michael.
Well, if you multiply it by 12, it definitely is.
It definitely is. Without lower interest rates, although I still think lower interest rates are driving the market, we won't see that momentum, but I still think there's momentum in the market. And I wouldn't be surprised if we saw even higher growth rates over November, but we'll wait until we get the data to reveal that. But at the moment, we're looking at the latest data, hot off the press, which is for October. So all capital cities, Michael, reported, and just on the annual results, the national house price is now up by 8.3% over the past year. I'm not sure we'll get to 10%, Michael, but we're certainly challenging the prospect of a 10% or double-figure price outcome for the national house price for the year 2025. All capital cities reported higher prices, Michael. In fact, all capital cities were higher by 1% plus over the month, and that's the first time we've seen that for some time.
Yes.
To that post-COVID period to see not just all capital cities rising, but rising by more than 1% over the month. The Darwin market, which is certainly booming, having revived after a lengthy period of subdued activity, up by 3.3%, was the top performer. Adelaide and Brisbane led the charge of as usual, the major capitals. Adelaide up 2.2%. Brisbane up 2.1%. Another very good result for that revived Melbourne market, up by 1.5%. Michael, similar to Hobart, and Canberra and Sydney were each up 1.2%. So some very strong results. Not surprising because as we discuss those auction clearance rates every week, we know that those higher clearance rates translate into higher prices. The usual suspects are leading the charge over the past year. Brisbane up by 13% over the past year to October. Darwin up 18.7%. Very strong market in Darwin, and Perth up 11.3%. So some very, satisfying results if you're a homeowner.
Yes.
The capital cities there to see just how strong house prices are rising. Not quite as strong for unit prices, Michael, but unit prices were up for the 9th consecutive quarter over the month, but up by 1%, which is still a very solid result. And unit prices are now up 6.3% over the year. That's national weighted average capital city unit prices. Again, Brisbane, we keep talking about Brisbane.
Yes, amazing.
Was the top performer. Just no sign of slowing down for units. 3.2% rise for Brisbane units.
1 month. Yeah.
1 month, which is very, very strong, and well ahead of the rest. Melbourne, again, some very good results there for Melbourne units, up by 2%. It's interesting that Melbourne units are outperforming Sydney units at the moment, but they are, of course, coming from, shall we say, a long way back. So they're still in catch-up mode, but definitely catching up. There's no doubt about that. A couple of falls there for the smaller unit markets. Hobart down by 1% and Canberra down by 1.3%. But when we're looking at the annual results, speaking of Brisbane, up by 19.7%, the Brisbane unit price over the year so far, or over the year to date to October, the annual result. But look at Brisbane's results over the past 2 years, Michael. Brisbane units up by 50.4% over the past 2 years. Adelaide similarly up 36.3% and Perth up 42.9%. Adelaide and Perth are smaller unit markets, but Brisbane certainly has a substantial unit market, but 50% increase plus for Brisbane units over the past 2 years. And with the latest results, Michael, just no sign of slowing down for Brisbane units. And as we say occasionally, it wasn't that long ago when the so-called pundits were saying that the Brisbane unit market was saturated and oversupplied, et cetera, and there'd be no prices growth, for decades. But that's certainly proven wrong, and a very, very strong market, the Brisbane market, not just for units, Michael, but also for houses. And, no sign of slowing down, and still leading the capital city markets. And as we do mention, Brisbane is now, in terms of the median house price, more expensive than Melbourne. Who would have believed? But just a sign of the times. And also the Brisbane unit price is higher than the Melbourne unit price as well. But interesting results, strong market. We expect this, Michael. There's still plenty of momentum for both units and houses through to the end of the year. We'll be heading now into the end part of the spring selling season post the Melbourne Cup Reserve Bank meeting, which always signals the end phase of the spring selling season. We will see, typically, we do see an easing in clearance rates, which still remain strong as we get more stock coming into the market, providing more choices for buyers and more competition for sellers. But these are very strong results, Michael, not a surprise. And as we said at the beginning of the show, it's an accelerating market at the moment.
Well, it's underpinned by strong fundamentals that are not going to change in the short term, no matter what happens to interest rates. And these are all combining to push property prices higher. As you've mentioned a couple of times, fears coming in. There's definitely FOMO. There's definitely a wide number of people now wanting to invest in Melbourne, apart from home buyers thinking that the market's moving on, because they're seeing the Melbourne markets coming from a period of languishing, lagging for a number of years. We'll be back each Tuesday with our weekly property insider chat to see how things are going. But as you say, the cycle's still got legs, and we've got a good couple of months ahead still in our housing market. Look forward to catching up with you next week.
Thanks, Michael.
As a way of having a bit more fun in these podcasts, each week I ask you a property trivia question and give you a chance to win one of my best-selling books. At the moment, I'm giving away Michael Yardney's Guide to Investing to 3 lucky people each week. Answer the question, go to propertytrivia.com.au and leave us your answer. And you're going to get an updated report, and 3 people each week get a copy of Michael Yardney's Guide to Investing Successfully. Here's this week's question. True or false? In Australia, landlords can increase the rent every month if they choose. Go to propertytrivia.com.au. Leave us your answer. We're coming to the end of the year, and as Dr. Andrew Wilson and I just explained, our property markets have performed strongly and are going to continue to do so. In fact, they've performed more strongly than most people expected at the beginning of the year. So I'd like to ask you a question. Have a look at how your investment journey has been. Are you on track to achieving the goals you set yourself for this year, for 2025? Are you comfortable that you're going to achieve the level of financial freedom you're looking for in the timeframes you set for yourself? Now, if not, don't worry. There is still time to make up lost ground. Yes, the market has performed strongly, but it's not too late. But I would be acting now. But you don't want to go it alone, because let's face it, this time of the year isn't your most productive time, is it? There's all those other things to think about, the end of year activities to get involved in, vacation schedules. But if you wait until early next year, yes, it's not going to be that long before it's 2026. If you wait until early next year to play catch up, well, how did that work for you last year? So save yourself the stress and have a chat with one of Metropol's wealth strategists now. Go to metropol.com.au. I'll leave a link in the show notes, metropol.com.au, and organise a time to have a wealth discovery chat with one of our wealth strategists. You'll find we're much more than just a buyer's agent. We help our clients safely grow intergenerational wealth through strategic property and wealth advice. We're big enough to tip the scales in your favour, but still small enough to care. And I was very proud that our team won 3 awards at the Finder Awards as the most trusted, the best customer service, and the most proficient property buyers, agents and advisors. Why not get that team on your side? Go to metropol.com.au.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
In my mindset message today, I'd like to explain to you how successful investors think very differently to the average investor. And in my mind, it's because they think in decades, not in days. Look, most Australians think short term. They're wondering what they're going to do this weekend, what's for dinner, or how to stretch the next paycheck. And for most beginning property investors, it's not that much different. They obsess about today's interest rates, this week's media headlines, whether their investment property will be cash flow positive right now. But successful investors play an entirely different game. They understand wealth is built slowly and steadily and strategically. They think in years and decades, not pay cycles or election terms. While the average investor asks, what will this property do for me this year, now? The strategic investor asks, where will this property position me in a decade, in 10, 15, 20 years' time? They realise over the meantime markets will rise and fall and flatline, but none of that matters. It doesn't matter much in the long term if you've bought the right asset in the right location and held it over a number of property cycles. The truly wealthy know that by doing the hard things now, delaying gratification, managing cash flow wisely, and holding quality assets, that allows them to live an easier life later, while the average Australian does the easy things now and has a hard life later. Successful investors, they don't get distracted by today's noise. They're too busy building tomorrow's freedom. So next time you find yourself worrying about short-term cash flow or interest rate chatter, ask yourself, am I thinking like a weekend warrior, a paycheck investor, or am I thinking long-term like a wealth builder? Because real wealth doesn't come from reacting to the moment. It comes from having a vision that stretches decades ahead and a strategic plan to achieve your goals. Thank you for spending the last little while with me. I hope you got some benefit from this show. But before you move on to the next podcast you're going to listen to, let me remind you I have another show that I produce once a week with leading demographer Simon Kirstenmacher. We call that Demographics Decoded, where Simon and I unveil the trends that are going to shape your future. In my mind, this is a must-listen to podcast for anyone interested in property investment, but also for business people and entrepreneurs. So if you don't currently subscribe to Demographics Decoded, just please stop for a second and subscribe on your podcast app where you're listening to this, or on YouTube. And of course, if you don't subscribe to this show, the Michael Yardley Podcast, why not click the link that says follow or subscribe wherever you're listening right now. So twice a week, you're going to get benefit from my guests and me. And I'd like to ask you a little favour, please. If you did enjoy today's show and you know somebody who would also benefit, please tell them about the Michael Yardley Podcast and Demographics Decoded. There's a share button on every podcast app. On Apple Podcasts, there are 3 little buttons at the top of the player. Well, just tell them about it. Just have a chat with them. Now, I hope you're going to be doing them a favour, and you're definitely going to be doing me a favour in my quest to help as many people as possible to become financially literate. And by the way, I've got a special bonus for you. As my way of saying thank you for subscribing, just go to podcastbonus.com.au. There'll be a link in the show notes, podcastbonus.com.au, where I've got a bunch of ebooks and reports. It's just my way of saying thank you for taking the time to listen. And remember, the information that we give you in this podcast is general information, not specific information about your personal circumstances, because we don't know about them. But if you do want specific information, you can always have a chat with my team at Metropole. Go to metropole.com.au. If you really want to learn more, you can always listen to the previous podcast, the many episodes we've already published. Just go back to the old episodes, which each have lessons about property investment, success, and money. Once again, thanks for listening to today's show.
Thanks for listening to this episode of the Michael Yardley Podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardley Podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael, but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?